All right, what's up? What's up, everybody? Good morning. Welcome to this shortened trading week's first pre-market rundown, our deluxe pre-market rundown session of the week. We're going to go over all the important news, notes, information, strategies that will be absolutely imperative to you staying consistently profitable here this week. Excited to get back on the horse, to get back in the swing of things, right? And let me see here. Okay. Okay. All right. Just making sure that I have everything up and ready to go. I hope everybody had a great weekend. Did you guys have a good weekend? Did you rest in? Did you go out? I know a lot of people were busy. Yesterday was work day for me, getting back on the horse with things. Had a few one-on-ones and just really getting locked in for this week. It's going to be a shortened trading week, so we know that can lend itself to being a lower volume week. So that's something to make sure that you factor in to your expectations for the week. As we dive into what we have going on here. So let me double check. Okay, pulling up what we have going on in the week ahead. Good morning, everybody. Again, hope you had a nice, safe, long weekend. Hope you got to rest up a little bit. It was definitely a mixed bag for me. I had some running around to do. I had graduations, birthdays, and multiple birthdays, and so it was definitely a lot going on. But I'm glad that I could take yesterday to really rein in and get a handle on things, and kind of set myself up for success here in the week ahead. So yes, good morning. Hope everybody had a great weekend, and I'm going to go ahead and dive into what we got popping this morning, because we have both the week ahead notes as well as our Monday specific notes. So we got a few things to go over. Let's make sure that we're comprehensive. We go deep, right, and really make sure that we set up ourselves to succeed in the week ahead. As always, we're trying to do one thing. Let's get 1% better. That is the goal each and every morning that we gather here today, right? Today, every day moving forward, we're trying to get 1% better, invest in ourselves, make sure that we are always raising the bar, but not so high to the point where we don't feel satisfied with the great strides we make, right? The small steps or make up for the leaps and bounds that we take forward. So let's just commit ourselves to the small steps, and then we'll find ourselves, really, really benefiting from the accumulation of those small steps in the future. So we're going to start off with the week ahead, and then we'll get into our more Monday specific news. In terms of the week ahead, investors headed into next week positioned as if the U.S. debt ceiling crisis will be resolved one way or another. If that is the case, the tech sector could be a major focus after NVIDIA recorded the single biggest one-day market cap rise in the history of markets with its post-earnings surge in share price of more than 25%. It is likely the debate on NVIDIA to ratchet up following the AI-inspired rally. Seeking Alpha analyst Dominic Rinaldi thinks that the bull investment thesis on NVIDIA is based on the view that we are at the beginning stages of what could be considered the fourth industrial revolution. While the Asian investor warned investors may want to consider selling shares due to the expensive price to sales ratio now in play. It is true, right? Based off of where it is, NVIDIA is a bit extended. I definitely took significant profits on them. You want to make sure that you're taking profits along the way, right? That's the only way you get paid is when you take profits. So take profits along the way. Make sure that, in your long positions, you're managing those. We broke the weekly downtrend a number of months back, right? Said, hey, this is a great time for you to place your tech long swings. And no matter what company that was in, unless it was something like Tesla, which hadn't broken the weekly downtrend yet. But one, Tesla being one that is definitely on watch to do that, in the coming weeks. If you found a tech that you loved and you place those long calls on them, right, those are paying heavily. Make sure that you're not just never checking your long-term portfolio or your long swing portfolio, because those bring in big profits, and you got to make sure that you lock those down as well. So I know that I tend to tell people, hey, keep your short-term stuff in one place, keep your long-term stuff in one place, but don't forget, because I do have a lot of people, who will message me like, hey, what do I do? I held this and I realize now it's about to expire. I can't call in and make them extend the option expiration date, right? So you make sure you're watching your longs, kind of like tapping in, checking in every day, every few days, just to make sure, okay, everything is good. Do I want to take profit here or no? Making sure you're doing that is a really important thing. The major economic release of the week will be the May jobs report on June 2nd. A drop in monthly payroll additions to 180K from 253K in April is anticipated, and the unemployment rate is seen inching up to 3.5% from 3.4%. So average hourly earnings are forecast to decline to a 0.3% increase pace from 0.5% in April. The jobs report will arrive less than weeks before the next FOMC meeting and is likely to kick off more debt debate if the Fed will raise rates again. Seeking Alpha Investing Group leader Lawrence Fuller thinks the central bank is likely to stand pat with rates based on the incoming economic data over the next 2 weeks. Quote, labor market strength is not disrupting the disinflationary trend or the gradual decline in wage growth. It is the best of both worlds, which is how we arrive at a soft landing, predicted Fuller. So overall, like this week, this is kind of just, laying the landscape. In terms of like the week ahead, there's not a whole lot in terms of like economic things on the calendar. We have a shortened week. So again, you have to make sure that you understand that and that you factor that into your expectations as we go into this week, right? We only have a 4-day trading week, which means lower volumes, which means you can get some fake outs, right? You can get some, just overall some chop. So just make sure that you are aware of that. Also, some big news that happened is they did, get the debt ceiling issue worked out. A lot of people think, okay, that will cause us to rally automatically. That is not the case. In recent history, I actually believe that, I wonder if I could, because I was doing some research and I screenshotted some stuff. But in recent history, we typically have gotten some selling. When that debt ceiling news happens, right? We get selling instead of buying. So that's something that I tried to make known last week, and I always want to make sure that we are aware of, is the fact that sometimes you have sell the news events where there's news that, again, you think would be explicitly bullish, and it does not end up being explicitly bullish, right? You end up getting an instance where the market sells instead of it going up, just like El Salvador with Bitcoin, right? El Salvador makes Bitcoin legal tender. Bitcoin runs up until the news. When the news becomes official, Bitcoin drops, right? You can see that exact same thing with the debt ceiling. So just something to keep an eye on here, because again, people automatically think, oh, the market is guaranteed to rip. It's not guaranteed to rip just because we did get, the debt ceiling agreement reached. That's no guarantee that we end up getting a ripper to the upside this week. So just be aware of that. You want to make sure that you're factoring those in to your expectations, because, people who just watch the news and they're not paying attention, they're like, oh, we got the debt ceiling, worked out. And we've got, we're coming off the holiday week, and they think, oh, the market's going to rip again. Well, typically holiday weeks, low volume weeks, right? So you might not get that huge volume ripper that you're expecting. And you might actually end up getting the opposite. In terms of earnings this week, we have HPQ. So HP, who reports, their ticker is HPQ. Hewlett Packard Enterprises also reports. And then that's on Tuesday. And then Wednesday, we've got Salesforce reporting, CrowdStrike reporting, Chewy, and NetApp. Salesforce is ticker CRM, CrowdStrike is CRWD. So both of those, important borderline household names, right? Salesforce is really well known. CrowdStrike, you guys have heard me mention a number of times. They're in the cybersecurity sector. And also first stock that I ever got 1,000% return on. So always hold a special place in my part there. Crowd, CRWD. Thursday, we have Broadcom, who reports, ticker AVGO, AVGO, Dollar General, Lululemon Athletica, and then Dell Technologies, as well as Macy's and Zscaler, whose ticker is ZS. So a few different names across a few different sectors that are reporting here this week. Any important corporate events? Let's see, investor conference. The conference schedule heats up, led by Computex conference in Taipei, with this year's main themes including HPC, artificial intelligence application, next-gen connectivity, NVIDIA CEO Jensen Huang, and Supermicro Computer, ticker SMCI, CEO Charles Liang are two of the Computex keynote speakers. Overall, though, not looking like really any crazy important things happening on the economic calendar. Or in terms of like data. Let's double check though. Make sure. Market Watch economic calendar. Okay, so Tuesday we get consumer confidence at 10 a.m. today. So at 10 a.m., if we see some volatility, that is what that is from. So that could end up, impacting how we move. Consumer confidence today at 10 a.m. So make sure you've got that, in mind as you're kind of observing the open. On Wednesday, we have ADP employment numbers. We have job openings at 10 a.m. on Wednesday. ADP employment at 8:15. We have initial jobless claims at 8:30 a.m. on Thursday, so that's important, right? We also have ISM manufacturing numbers at 10 a.m. So Thursday right now looking like the heaviest day in terms of data, but we are getting data each day this week. In terms of Friday, we get U.S. employment report and U.S. unemployment rate. So Thursday, Friday seem like the big days. Wednesday, kind of the lightest day. Today, we get consumer confidence. So you could see, some of those big candles at 10 a.m. or maybe see a weird candle, long upper wick, long lower wick, something like that. That's likely because of the consumer confidence data that came out. So that's kind of what we need to keep on the radar in terms of data this week. There are two in the chat if that makes sense, if you're kind of understanding that. Today it's really just at 10 a.m. we got a piece of data. Tomorrow, not really much important data. And then Thursday and Friday is when we get the bigger pieces of data that we'll need to be aware of, right? And you got to factor that into your swings, your trade plan, all of that, right? All of that you need to make sure you factor these little bits and pieces of information, because that can wreck your trade, cause you to panic, a number of things. But when you're aware of them and you expect them, you can say, okay, this volatility was just because of this, instead of you saying like, oh, I saw a big red candle in 1 minute, like the market's going to drop, or we're going to crash or something like that. Now, let's see, pushing forward in terms of the week ahead, that was pretty much everything on the docket for the week ahead. So let's now dive into um, deeper into our Monday specific news. So, our top news: finish line in sight. Investors are bracing for a week of political wrangling in Washington after President Biden and House Speaker McCarthy inked a deal on the debt limit. Both sides now have to muster enough votes to win congressional approval, despite some opposition from the likes of Republican Freedom Caucus and progressives in the Democratic Party. While enough bipartisan support is expected to be eventually garnered, the measure could still run into some procedural obstacles as the clock ticks down to avoid a catastrophic default by June 5th. So even though technically Biden and House Speaker McCarthy inked the deal, they still have to get enough votes for congressional approval, right? So this whole process is not over. It's not done yet. I feel like it's not appropriate to say anymore. I was about to say, the lady who sings, but I feel like that's kind of like, I don't want to say anything that can get me canceled in 2023. But she has not sung yet, right? The lady who decides whether or not the deal is done. And until she's sung, right, until Congress has approved this, we're still in the inner workings of this deal. But it was definitely positive progress and a stark contrast to what we'd seen in the weeks prior, which was just, they're still, we're at an impasse and the talks aren't going anywhere. And now we actually see, a deal that's inked and it's just formalities. So we'll see if, everybody plays along, plays their part, or if we end up getting stuck, bogged down in these formalities. Now, in terms of legislative text, the agreement lifts the current $31.4 trillion deal ceiling into 2025, meaning the limit on government borrowing could be extended until after the next presidential election. Non-defense spending will be capped at current levels for the next fiscal year and only rise by 1% in 2025. Congress would also need to approve 12 annual spending bills or risk facing a snapback to spending limits from the previous year. Other changes that were central to the compromise included limiting some food stamp provisions to encourage recipients to find jobs. The agreement also halts some funds to hire new IRS agents, claws back billions of dollars in unspent COVID relief, and would speed up big energy projects through permitting reform. In addition, a pause on student loan repayments will come to an end in August, though Biden's student loan forgiveness plan will end up being decided by the Supreme Court. Now, going deeper, U.S. stock index futures advanced following the release of the bill, with Seeking Alpha investing group leader A&G Traders forecasting new market highs. Though Mott Capital Management sees the potential for a deal draining a massive amount of liquidity from the market, the measure will be taken up this afternoon by the House Rules Committee, which will determine the framework for considering the legislation before a vote takes place in the House on Wednesday. So the vote takes place in the House on Wednesday. It's another important thing, right, to factor in for this week. We've got this vote taking place tomorrow. If approved, a decision in the Senate would follow and could happen by the weekend. So we do have the House, that's the vote, and then the Senate, because this is just good old democracy, right, where everything takes forever to happen. We got House, then Senate, and then maybe we could get full approval by the weekend. So we might not end up getting any type of, like full announcement until next week. On to our next headline. On the move, $1 trillion market cap club building on a meteoric rally. Shares of Nvidia are up another 3.5% in pre-market trade, putting the stock over $400 to start the week. It also puts the company above a $1 trillion valuation if the gains will hold, as the stock market darling rides a wave of investor exuberance surrounding artificial intelligence. The chipmaker has responded in kind by refreshing its PR feed, publishing 7 separate press releases over the last 24 hours. Among them were a slew of products and services tied to artificial intelligence, like an AI supercomputer platform called DGX-GH200 is expected to be used by initial customers like Google, Meta, and Microsoft. Will the rally go on? And they just have a bunch of different, contributors that are kind of giving their 2 cents around it. NVIDIA definitely leaning hard into the AI exuberance bubble, the AI exuberance wave. I would too, right? If I were them, I would try and keep dropping as much information as possible that's tied to AI. I don't care if it's just, hey, we have AI cookies in the break room, right? That's what's driving this tremendous growth, the tremendous push that they've seen. I continue trying to stoke that. And that's exactly what they're doing, right? We've got these press releases and all these different supercomputer platforms and stuff. They're trying to keep the momentum going. I don't blame them, but we've got NVIDIA joining, pretty historic partners up in that $1 trillion market cap club. Apple, one of those companies to cross that same threshold. In terms of energy news here, under strain, tensions are reportedly rising between the world's biggest oil producers as Russia continues to pump huge volumes of cheaper crude oil into the market and undermine Saudi efforts to boost prices. This is important because oil was at a spot where it was kind of starting to look interesting. Last week, the kingdom's energy minister issued a warning to oil speculators, signaling the market that a further production cut was possible, but Moscow's deputy prime minister soon contradicted him by expressing doubts about further reductions. So there's trouble in paradise here as we see the Saudis and Russia kind of coming to a standoff where Russia is like, hey, guys, we're fighting a war. If anybody wants cheap oil, we got it. Please buy from us. And, the Saudis are like, hey, we need to decrease production so that we can increase prices, right? Basically, they want to collect a bag during the summertime. They're like, you Americans are going to be outside. You're going to be traveling. Your Memorial Day. You got your hot dogs on the grill. Your burger buns toasting. You're going to be using up all this oil. We want to charge you more for it. And Russia is like, no, we're going to keep the price on our crude oil low. So there's definitely a battle that's kind of ensuing. We'll see who ends up winning it, but I feel like OPEC Plus might end up increasing, prices even more, cutting production more. But it's just tough because then some people might just say, hey, I don't really care about Russia's war with Ukraine. I'm going to buy from Russia. So, we'll see how that ends up. It's not like the U.S. or any of their allies would buy from them, would buy from Russia. But it's just, it's trouble in paradise when it comes to the oil industry. Obviously, Buffett still has faith. He's still buying. So you've got a number of people that are still bullish on oil, despite the fact that it's taken a lot off in terms of like value, right, in price action the past few months. But it's really been, some selling / consolidation. But we are at, kind of solid levels here where we found support there in the past. On oil around these levels. I'm just looking at the Oxy chart now. Same thing. We've got strong support around that 57.40 area. And, it would not be outlandish to think that strong support, will continue. So in terms of like looking at it from a weekly standpoint, right, oil and these energy tickers could be poised for a comeback, but OPEC Plus would need to, kind of get Russia to play ball or figure something out, right? They got to figure something out because at the end of the day, they're looking to take advantage of this extremely lucrative summertime, and they can't do so unless they have solidarity really across the board. Either that or things could get ugly. So let's do this. Looks like overall, Oxy short term is bear flagging on the hourly. So if we get that close beneath 58.27, we can see Oxy, fire down in the short term. But if we hold this 58.27 area on the hourly, we could see us, start to push, and particularly pre-market, we've got the potential, if we hold this pre-market low, which it looks like we're doing, we've got the potential to fire a nice little 5-minute double bottom if we're able to hold this low, right? So we can go ahead and mark off that 58.60 level. So in case we get above that, could make for a nice day trade on Oxy. Let's see here. I'm gonna bring out. We'll check it out. As I'm talking about this and typing, we're literally like dropping lower, like a big red candle there. So it might want that hourly bear flag. So that's kind of like the two outcomes, potentially for Oxy here is if we close beneath 58.27 on the hourly, we get a nice sell down right back to these lows from last week. Or, if we end up holding and we get back above, right, then we can push. And, if this ends up kind of getting right back above over the course of this next 5-minute candle, then that's just a long lower wick, could be a hammer reversal, and we push back up to fire the double bottom. So there could be some opportunity there with Oxy and with energy stocks as we head into open. Something to keep an eye on. Again, nothing that I'm taking directly at open. In terms of energy, it's more like, okay, let's see what we end up getting, and then we can make our decisions from there. In terms of outlook and getting back into, oh no, we're staying here with energy. Remember that, okay, yeah, so we got to finish this up. Remember that the two OPEC plus heavyweights entered an oil price war in 2020, that being Russia and then the Saudis, over proposed crude production cuts, which sent prices crashing. However, don't count out a resolution with ties and relationship able to survive difficult dynamics like Russia's invasion of Ukraine. So, they could come together and end up working things out, but they did go to war, right? Price war in 2020, and that sent oil tumbling. So oil, one of those sectors where it is very predisposed to news. If they do get, some partnership and they get a deal cut, things look great, for oil. If they don't, and Russia's like, still increasing production and undercutting the prices of the Saudis, there could be issues. In terms of outlook, got a light. Meet the newest candidate looking to identify as an ESG stock, Philip Morris, who cigarette company, basically, I'm pretty sure. CEO Jacek Olczak believes that efforts like pushing away from cigarettes toward devices like its IQOS heated tobacco stick could set up the tobacco group for inclusion in one of the fastest growing segments of the investment management industry. In fact, vapor-based nicotine alternatives account for about a third of Philip Morris's revenue in 2022, though others see an ESG classification as an inherent contradiction. Compounding the problem is that there's no standard framework that defines, quote, environmental, social, and governance, despite developments in areas like Europe, where many asset managers and pension funds have sold off tobacco stocks in response to ESG mandates. So it looks like they're trying to position themselves as like a sustainable company. I don't know, right? Pivot. They're looking to pivot. Whatever you see that you need to do in order to survive, right? Whatever pivot is necessary, you got to do it, and that's what Philip Morris is looking to do. So Philip Morris trying to survive. And just continue to remain profitable in a world that's changing very, very fast. And again, the outlook on cigarettes is changing, and the outlook on a lot of different things is changing. So Philip Morris is trying to bob and weave and stay with things. Can they rebrand as being sustainable? I don't know, right? We'll have to see. But it is an interesting development that they're like, hey, smoke this cigarette for the benefit of the earth, right? I don't know if companies will buy that or get behind it, or investors will, but we shall see. In terms of today's markets, we're mostly green across the board. In Asia, Japan up 0.3, Hong Kong up 0.2%, China up 0.1%, India up 0.2%, London we're down 0.6%, Paris we're down 0.4%, Frankfurt we're up 0.5%, the Dow is up 0.2%, S&P up 0.6%, Nasdaq up 1.1%, crude oil down 1.2%, gold up 1.5%, and then Bitcoin up 0.1%. In terms of today's economic calendar, we've got consumer confidence at 10 a.m. That is really the big thing that we have in terms of data today. So look out for that at 10 a.m. What else is happening? Debt ceiling deal would speed up Mountain Valley Pipeline. And I guess Mountain Valley Pipeline is directly related to a stock whose ticker is ETRN. So, if there is a debt ceiling deal, maybe that's something that ends up translating to positive news for ETRN, that's Equitrans, what a name, Equitrans Midstream, right? So that's their name. They've said that the $6.2 billion project is 94% completed, but it still needs permits to build across streams and protected habitats. Other partners in the project are Next Era Energy, Consolidation Edison, and just more energy tickers. But according to deal text, basically they could get the permits and stuff that they need in order to finish this. That would accelerate the completion of the Mountain Valley pipeline. So, that's something where kind of more speculative, right? Riskier bets where you're like, okay, maybe ETRN sees some positive movement following a debt ceiling deal that gets made. Of course, that ends up being more speculative than anything, but ETRN is up big pre-market, I guess, based off of probably that exact news. So something to keep an eye on here as we kind of look at plays that could end up working out because of a debt ceiling resolution. So they also had a bull flag breakout on the daily as well already this past week, right? This past Friday. So they already got that close above, what is that, basically $6, 5.99. Yeah, basically $6. So once they got that close above 5.99, they were definitely bullish. But this news probably helped a whole lot as well. So they're on the move there, ETRN. REITs could continue downward trajectory even as other major indices gain. Paramount, ticker PARA, PARA, potential merger arbitrage with downside protection. And then concerns over COVID lockdowns in China may be overstated. Why 2023 is turning into the year of the healthcare spinoff. Drug pricing watchdog raises alarm over upcoming liver disease meds. Next set of COVID boosters to target new Omicron variants. Disgraced Theranos founder Elizabeth Holmes reports to prison. And then ZIM, ticker ZIM, a buy high, sell low investment strategy isn't viable. I'd say so. And then Rolls-Royce eyes cutting thousands of jobs in turnaround. So Rolls-Royce joining the trend of cutting jobs to help the bottom line and appeal to investors. That will wrap us up here and take us out on this beautiful Tuesday morning here. May 30th, 2023. May is almost done, right? We're headed into June. We have beautiful new beginnings happening. We're in the heat of summer. We've got a number of different things going on, the debt ceiling. But right now we are well and prepared to go to battle this week. Again, short holiday week. What does that mean? A lot of times we can get low volume. So make sure you're aware of that. We can get low volume. We can get some chop, right? We can get some indecision. So just make sure that you factor that into like the heft of your positions, right? Typically, you don't get big volume on short weeks. It's not like you can't happen, but it's not very typical. So just make sure you're aware of that, right? And factor that into your plan. And I'm excited for what we have going on this week. We have a number of good looks that we came into this week with from last week. We've got a number of different stocks looking good. Checking on Amazon here, which we haven't checked back in a bit. If Amazon comes back down to this 118.60 area and holds that on the daily, a beautiful spot to get into some Amazon call swings. So that again, that 118.60 level on Amazon, if we come back, retrace that, beautiful spot to hop into some Amazon call swings. And just, a number of other things that we're keeping our eyes on, right? We're keeping our eye on Tesla, right? On the weekly, couldn't get that weekly breakout last week, but it's looking to peak above, right? It's already peaking above right now. We'll see if that ends up, holding by the end of the week. But if we peak above and then we get back beneath that 194 area by the end of the week, and we put in a shooting star, right, then that's obviously not good. But if we can break above, Tesla just seems like that type where it would break out early week or midweek and then just rip right out of the gate. So we'll have to see. But we're watching that 194, 195 area right now for Tesla. We're sitting around 200 currently pre-market. But we really want to see where that finishes by the end of the week, because again, that is one of those, really big techs that we know can move, but they've been beaten down. And if we can break that weekly downtrend, that'll be the first step to really getting Tesla back on that rip mode to the upside. And also it can be very profitable when we look at long swings, right? And leaps and things like that. Because if you get some Tesla calls, 3 months out and you let those babies roll, even if we push to test the major downtrend like those, you're looking at easy 1,000%, 2,000% play. So definitely keeping an eye on Tessie as well. But overall, guys, I know you got tons of value. You're 1% better just by being here. So congratulations on that. If you want to show any love for getting that value, just make sure you show love to the account, right? Comment on the Instagram reels, watch the Instagram reels, the YouTube shorts, take in that information as well, that free education, and just continue to garner and add to that foundation that will contribute to you moving forward, establishing financial freedom and accomplishing your goals, right? Beyond making money, because we're not here put on this earth just to work a 9 to 5 and then die, right? That's just, it's boring. It's no fun. You only get one life, right? So make sure that you have the time to do what you want to do with that life. And it takes putting systems in place in order to do that. So if you're not signed up, also make sure you're signed up for the Chart with Confidence Challenge. Super excited for that. Was refining the content that I have for that this past weekend, going through and picking out the best examples for us to go through and trade and chart, and to just really, really make sure that everyone emerges from that a master technical, analyzer. So I'm very, very excited for that. If you're not, make sure you're there for that. Chartwithconfidence.com. Last live masterclass of the year, 3 days charting boot camp. Super excited. You'll be getting emails about that soon with more details. But just make sure you're signed up. You got to be in the room if you want to get the results. If not, right, you continue to struggle with that lack of confidence placing trades until you know what you're doing when you're looking at a chart, right? And making sure that what you're seeing is real, right? That's actually a pattern. And you're not just saying, oh, hey, this is this and this is that. And then you look at it, I look at it, I'm like, this is not a pattern, right? This isn't what you should be looking at. These are your endpoints, that type of thing. That takes experience, putting in the reps. We're packing years of experience, right? Months of experience of live trading into that session. So make sure you're there and you're ready. It will go late, right? You can leave early if you want to leave early, but it will go late. That's completely fine. I'm accepting it, but I'd rather get in all those reps, and just absolutely smash it these 3 days rather than, just say, oh, okay, hey, I'm going to stick to this time schedule. So you don't have to stay for the whole thing if you don't want to, but I'm going to get it in. So for all you guys that are willing to, get it in with me, prepare and get ready to strap in, right? Because I'm very excited for that. But everybody have a great rest of your day, right? Let's get ready to execute, remain patient, get 1% better. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one, everybody. Peace.